Welcome to the deep dive. Today we're digging into Alphabet's Q2 2025 earnings. And this wasn't just your standard quarterly report. It felt pretty pivotal, actually. CEO Sundar Pichai even called it standout. So our goal here is to really unpack what went down, look at the financials, sure, but also get at this big theme, how AI is, well, fundamentally changing Alphabet.
Absolutely. And to do that, we've got the earnings analysis, the SEC filings, notes from the analyst calls, news reports, the whole lot. Because you really need all of those to see the full picture, right? It's not just about the numbers themselves. It's about the strategy, what it signals for, the wider tech world.
Okay, so Pichai says standout. Let's unpack that. What did this quarter really tell us? I mean, we heard about a beat and raise, which always gets attention, but also this really bold move on spending, massive capital investment. Let's start with those headline numbers then. They definitely made some waves. Total revenue was $96.4 billion. That's quite a bit higher than the estimates, which were more like 93.9, maybe $94 billion. And the earnings per share, the diluted EPS, $2.31. Again, well ahead of the $2.17 analysts were expecting. But it wasn't just one thing carrying the load, was it? Search, YouTube, subscriptions, even cloud, all double-digit growth.
Exactly. The numbers are impressive, no doubt. But the story behind the numbers is AI. It's everywhere. Like Pichai said, AI is positively impacting every part of the business, driving strong momentum. It's not subtle. You see it with AI overviews in search, apparently boosting queries. You see it in the massive demand for AI infrastructure, lifting Google Cloud. It's not some future thing anymore. It's hitting the bottom line now.
Okay, so AI is the big driver. Let's break down where that growth actually showed up in the different parts of the business. Google Services, that's the core, right? $82.5 billion in revenue, up 12% year over year. Solid. And inside that, search and other stuff brought in $54.2 billion, also up 12%. And management directly tied that to things like AI overviews and this AI mode, saying it's getting people to search more, engage more. Then you've got YouTube ads, $9.8 billion, up 13%. That growth seems to be picking up speed. And what seems really key there is YouTube Shorts starting to pull its weight, monetizing as well as traditional videos, at least in the US.
That's a big deal for inventory, yeah.
And, don't sleep on subscriptions, platforms, and devices. That segment jumped 20% to $11.2 billion. Really shows those diversification efforts paying off. Things like YouTube Premium, YouTube TV, and those Google One AI plans.
Yeah, the AI Pro and Ultra plans seem to be finding an audience. But honestly, the star of the show has to be Google Cloud. Just phenomenal growth, $13.6 billion in revenue. That's up 32% year over year. And what's really interesting is management saying the growth in the core cloud platform products, especially the AI stuff, infrastructure, Gen AI solutions, was actually much higher than that overall 32%.
Wow, so the AI demand is really concentrated there.
Exactly. That's the engine. And the whole division just crossed a $50 billion annual revenue run rate. It's a huge milestone. It proves cloud isn't just growing fast, it's becoming a massive scaled business.
Okay, so mostly a very strong picture. Were there any weaker spots? Looks like Google Network was $7.4 billion, down just slightly 1% year over year, the only bit that dipped. And then other bets, Waymo and the $373 million in revenue, but still losing money, about $1.2 billion operating loss. Though management sounded pretty committed to Waymo, right? Despite maybe missing some targets. They mentioned expansion hitting 100 million autonomous miles.
Yeah, they definitely doubled down on Waymo's long-term potential. So slight dip in network, ongoing investment in bets, but like you said, the big picture was overwhelmingly positive. And the profitability side is where it gets really fascinating, especially with cloud. Operating income there surged to $2.8 billion. The operating margin went from, 11.3% last year to 20.7% this quarter.
That's a huge jump in margin.
It is. It shows real scale and leverage, and it's tied directly to selling more of those higher margin AI solutions, the TPUs, Gemini Access. This richer, more profitable product mix, as they call it, makes those huge investments they're making seem a lot less risky. They're pouring money into something that's already proving very profitable at scale.
Good point. And we should probably note, Google Services operating margin looked flat at 40.1%, but they called out a big one-time legal charge, $1.4 billion. That affected that. And free cash flow, $5.3 billion for the quarter. Lower, yes, but impacted by that higher CapEx and tax timing. The trailing 12-month number is still huge, like $66.7 billion.
Right, the underlying cash machine is still very much intact. But yeah, the main takeaway, the narrative woven through everything, was AI. Not as some future bet, but as the core growth engine right now.
Okay, so let's talk more about that AI impact. For ages, the big fear, the sort of elephant in the room was, will AI kill Google search? Will it cannibalize the main moneymaker? Did this quarter give us any answers on that?
It really did. And the answer seems to be no, quite the opposite, actually. Management shared data suggesting AI query. Overviews now reaching over 2 billion users a month are actually leading to more queries, like over 10% more for the types of searches where they appear. And this AI mode, the separate experience in the US and India, already has over 100 million monthly users for complex searches. So it's not eating the core. It seems to be expanding what people use search for.
Huh. That's counterintuitive to what many feared. And it's not just about typing questions, is it? You mentioned multimodal search earlier. Things like Google Lens up 70% year over year. And circle to search, especially with younger users. What does that mean strategically?
Well, it's potentially huge. It's like you said, it brings the offline audio and visual world back online.
Mm.
Think about it. Before, searching something you saw or heard was clumsy. Now, Lens or Circle to Search makes it instant. This creates entirely new kinds of searches, new categories of user intent that Google can now understand and eventually monetize. It dramatically expands the surface area for search.
And they're already thinking monetization, right? They said AI overviews are monetizing at roughly the same rate as traditional search results.
Yeah, that was a key statement, a big relief for many, I think. Plus, they confirmed they've started testing ads within AI mode. So the path to commercializing these new AI experiences is becoming clearer.
And this whole two-surface strategy, keeping the regular search page but enhancing it with AI while also building out the separate Gemini app, seems less like hedging bets and more like carefully managing innovation, protecting the core while still pushing the boundaries.
Exactly. It's a sophisticated way to navigate the transition, protect the cash cow, while building the next potential growth engine. And speaking of growth engines, let's swing back to Cloud's AI play. They really emphasize their differentiated full-stack approach, meaning they have the custom chips, the TPUs, they have their own powerful models, Gemini, and they have the tools for enterprises to actually use it all. That end-to-end capability is a big differentiator.
And they back that up with some validation points.
They did, pointing out that nearly all Gen AI unicorns use Google Cloud, and that advanced research labs are choosing their TPUs. That's strong third-party endorsement of their tech leadership.
The enterprise demand numbers were pretty staggering, too, doubling the number of big deals, over $250 million, a 35x increase in Gemini use by businesses, and that backlog hitting $106 billion. That's just massive. An 18% jump sequentially. That gives them incredible visibility.
Incredible visibility. It shows this isn't just hype. Companies are signing huge long-term contracts for this capability. And maybe the most symbolic win on this front was the news that OpenAI is now a Google Cloud customer.
OpenAI, really? A major competitor using their cloud?
Yep. It underscores Google's point about having an open, competitive platform. Even major AI players need their infrastructure. It's a powerful statement about the quality and capability of Google Cloud, particularly for demanding AI workloads.
And this AI isn't just infrastructure, it's baked into their products to make money directly. Like in the ad business, smart bidding exploration giving advertisers a 19% boost in conversions on average. And tools like Ascent Studio helping advertisers create better ads with AI, now used by over 2 million of them, up 50% year over year.
Right, it's improving the core ad engine's efficiency and effectiveness. And then you have those direct new revenue streams we touched on, the Google One AI plans feeding into subscriptions, and YouTube Shorts monetization really kicking in, essentially unlocking a vast new ad inventory source.
Okay, let's pivot to maybe the biggest signal about the future from this report, that huge jump in planned spending. They revised their full year 2025 capital expenditure forecast up by $10 billion, from $75 billion to $85 billion.
Yeah.
That's unprecedented. And initially, that number seemed to spook the market a bit.
It did, yeah. There was a bit of a knee-jerk reaction. $85 billion is a lot of money, even for Alphabet. But the rationale they gave was very clear. It's a direct response to overwhelming customer demand, especially for cloud and AI infrastructure. This isn't them just building speculatively. They said roughly 2/3 is for servers, the rest for data centers, networking. It's basically required spending to meet the demand they're already seeing, the demand reflected in that $106 billion cloud backlog.
So the market kind of digested that. The perception shifted from, wow, that's expensive, to, okay, that's necessary.
Pretty much. The consensus now seems to be that it's warranted due to top-line growth. It makes sense because the demand is so strong. But we do need to acknowledge the financial consequences. More CapEx means more depreciation hitting the P&L down the line. They explicitly said depreciation growth will accelerate again in Q3, so that will put some pressure on reported profits and free cash flow per quarter.
Right. It's an investment with a future cost attached. And they also talked about supply and demand remaining tight, even into 2026.
Yeah, the CFO, Anaj Ashkenazi, said they expect to stay in a tight demand-supply environment going into 2026.
Yeah.
Which honestly tells you demand is probably still running ahead of even this massive build-out plan. It suggests they have strong pricing power on clouds. A good problem to have, but a challenge nonetheless.
So this $85 billion and the hint of even more spending in 2026, it really signals that leadership sees this AI wave not as a blip, but as a fundamental multi-year shift.
Absolutely.
Yeah.
This is them saying, we believe this is the future, the foundational layer, and we need to build the infrastructure to dominate it. It's a strategic land grab for the AI era, prioritizing long-term share and capability over short-term margin optics.
Okay, looking forward then, did management give any other guidance or warnings? Sounds like maybe some headwinds for ads in the second half?
Yeah, they flagged a couple of things. Tougher comparisons year over year for ad revenue because H2 2024 was strong. Plus, no U.S. election spending this year compared to last year. And costs are expected to rise not just from depreciation, but also some targeted headcount increases in key areas and more marketing spend in Q3 for the new Pixel phones. So growth, but also rising costs.
And what about insights from the Q&A with analysts? Anything particularly interesting come up there?
A few things. On agentic AI, AI that can take complex actions for you. Pichai basically said the tech isn't quite ready for prime time yet. Latency, cost, reliability are hurdles. He pointed more towards 2026 for wider use. Philip Schindler, the chief business officer, cautioned analysts not to get too hung up on just paid clicks in search, which were up 4%. He stressed they managed for the advertiser's overall return on investment, which is more complex. There was a question about talent, the AI talent wars. Pichai sounded confident, pointing to Google's deep bench, the exciting work they offer, and crucially their access to massive computing power, which top researchers need. And that OpenAI partnership came up again. Pichai framed it very positively, a win for Google Cloud's open approach, saying they want to invest more and grow this relationship.
So the overall picture seems to be a company firing on most cylinders, really leaning into its strengths in AI and spending aggressively to consolidate that position. But despite all this positive momentum, what are the main risks we should keep an eye on?
Well, execution is always a risk when you're spending $85 billion. Can they build out that capacity effectively and efficiently? That's number one. Then there's the persistent overhang of antitrust and regulation, particularly around the core search business. That hasn't gone away. The competitive landscape in AI is incredibly intense. Microsoft, Amazon, startups, everyone is racing hard. And, there's always the risk of margin pressure if, for some reason, that cloud revenue growth starts to slow down before the profitability fully matures across the board.
Okay, those are definitely real risks. But Alphabet has some pretty strong shields against them, right?
Oh, for sure. That $106 billion cloud backlog is a massive buffer. It gives them confidence that the demand is real and locked in, justifying the spending. The fact that cloud is already showing significant profitability and margin expansion is huge. It's not just growth at any cost, it's profitable growth. That two-surface strategy in search helps mitigate the risk of disruption to the core business. And fundamentally, they have that fortress balance sheet, over $95 billion in cash, strong ongoing free cash flow. They have the financial muscle to invest through cycles and challenges.
So wrapping this all up, that huge step up in spending, the $85 billion CapEx plan, while it might cause some short-term jitters or pressure on metrics, it feels pretty rational, almost necessary given the demand they're seeing. Like it's a strategic requirement to secure their place in this AI-driven future, which looks increasingly like the bedrock of the whole digital economy.
I think that's exactly right. And it makes you think, doesn't it? All the evidence this quarter in Frist, the booming, profitable cloud business, search holding strong, and even growing thanks to AI, new AI features actually making money, it really suggests Alphabet isn't just reacting to the AI shift, they're actively shaping it. They're trying to be one of the main architects, building the essential infrastructure that potentially everyone else will rely on.
Yeah, and that leaves you with a final thought, maybe. What is the long-term impact when one company makes this kind of enormous demand-fueled bet on building the foundational infrastructure? How could this Alphabet land grab, as you called it, reshape not just tech, but maybe other industries entirely over the next 5-10 years? Something to definitely keep watching. Thanks for joining us for this deep dive. We hope you'll continue thinking about these big shifts and their implications.